Last year, private credit was the hottest investment move, promising 10% returns when bonds paid nothing. This year, institutional investors are pulling out $47 billion. And if you own it, you might be stuck watching. Hey, I'm your Money Intel host. Today we're talking about something that sounds boring but could literally lock up your money for years, the private credit exodus happening right now in June 2026. This affects way more of you than you think, even if you've never heard of private credit. By the end of this, you'll understand exactly what's happening, why it matters, and whether you're at risk. Let's start with what private credit actually is, because the name is deliberately confusing. Private credit is basically loans to companies that are too risky or too weird to borrow from banks. A hedge fund or a private credit firm lends them money, charges them 8 to 12% interest, and promises you a slice of that return. Sounds amazing, right? It was. For about 3 years, private credit was the darling of Wall Street. Pension funds dumped billions into it. Insurance companies, endowments, everyone, because when the stock market was choppy and bonds paid nothing, getting 10% risk-free seemed like printing money. Here's the problem, it's not actually risk-free, and it's definitely not liquid. Liquid means you can get your money out when you want. Private credit? You're locked in for 5 to 10 years. Full stop. You can't sell it. You can't touch it. So last year, when people realized interest rates might stay high longer, and that 10% promise wasn't looking so guaranteed anymore, everyone wanted out at once. And that's when they discovered there's nowhere to go. This is where the mechanism gets scary. Imagine you and 500 other people all gave your money to one vending machine company. It promised to give you 10% of the profits. Everything's great until the vending machine breaks and profits drop 40%. Now you all want your money back. But the vending machine company can only pay out 10 investors at a time. By the time it's your turn, they might be bankrupt. That's essentially what's happening in private credit right now. The borrowers, these private companies, are struggling. Rising interest rates made their debt more expensive. Some of them can't refinance. And the funds that own their loans are facing redemption requests they can't handle. So what do? They slow down payments. They freeze access. They tell you your money will be ready in 3 to 5 years. You're trapped. And here's the kicker, most people don't realize they own this stuff. It's buried in alternative allocation on their quarterly statement, or their financial advisor put them in a fund that has 15% private credit exposure and never mentioned it. Let's talk numbers. If you had $50,000 in a private credit fund that promised 10% annual returns, you probably thought you'd have $55,000 in a year. Instead, here's what actually happens. The fund freezes redemptions, takes your money off the market, your 10% return materializes on paper only, and when you finally do get access in year 3, markets have shifted, rates have changed, and that paper gain might be worth 6% in real dollars. Meanwhile, someone who put that same $50,000 into dividend-paying stocks at 3.2% plus growth could have moved money in and out freely and kept up. The math doesn't work out like they sold it. And the biggest red flag? In the last 90 days, 17 major private credit firms have paused or suspended redemptions. That's not a market correction, that's a structural problem. Here's your one action step today. Pull up your latest investment statement, your 401k, your brokerage account, your robo-advisor dashboard, whatever you use. Search for the word private or alternative or illiquid. If you find anything, write down the fund name. Then email your financial advisor and ask one question: when can I actually get this money out, and what happens if I need it before then? Write down their answer. If it's 3 to 5 years or we'll let you. No, you have a liquidity problem. That's not advice, that's just clarity. Once you know what you own, you can decide if it's worth the risk. Most people never even ask. So subscribe for one money idea every single day. Drop a comment if you own private credit and didn't know it, I read every one. Let's get your money working for you, not locking you out.